Welcome to episode 1, Profitable Without Pretending. I'm Eric Grinberg. This is my co-host, John Pierce. We are excited to have you here today. John Pierce, obviously an industry legend. Excited to have him on the coast, get his expertise, and talk about what's going on. This podcast will be about the industry, recruiting, business, entrepreneurship, a little bit of everything. If you are an entrepreneur, a financial advisor in the financial services space, this podcast is for you. If you're not, it'll be a good hang, and we're excited to have you either way. JP, why don't you tell everybody about your background? You've had a long career from Merrill Lynch in the old days when used to mean something to be at Merrill Lynch, all the way through now doing some great consulting stuff. Tell us a little bit about where you've been, what you've done, and what you're doing now.
Awesome. Well, thanks for having me. I look forward to doing this on a regular basis. We're going to have some great guys.
Yeah.
So first 14 years, Merrill Lynch. So started out as they call this a financial consultant in Cincinnati, Ohio, and did that for 5 years, and then got sent to Philly in 98 to run downtown Philly. So I ran downtown Philly for 5 years, and then got sent to New York to run fee-based business. Yep. So PIA, Malua, Premier Wealth Plan, the Alliance program.
Yeah.
And then from there, dear friend Manish DeVay recruited me to come and run recruiting for EP.1 at Ameriprise. So major change in culture, having the managers recruit versus bringing people up, doing 1,000 cold calls a day and then getting into a franchise and then moving on. Was at Ameriprise for 6 years, great run in Minneapolis. And then Ron Kraszewski and Jim Zemlak recruited me to run recruiting for Stifel, St. Louis-based company. Great experience, primarily W-2. At the time, they had a nascent independent channel, and filled out my resume right before COVID hit. Adam Antoniadis, former CEO of Cetera, hired me to start a recruiting organization out of San Diego, and we had some fun. Jen Starr did a recap December of 23, and I've been free for a year now.
All right. What have you been up to since?
So started, took a year and wrote a new book I'm excited about called Unshakable Confidence. A lot of industry luminaries contributed to the book. Really, it's about giving back after 30 years, trying to help. I think what we've all realized is we need more younger people in our business, and we need to do a better job of coaching, mentoring, soundboarding, being a Sherpa, helping people to survive the first 5 years of our business, right? If you can survive 5 years, then you can create transformational wealth for your entire family and your next generation. It's just getting through that first 5 years. And I have a consulting company where I consult the C-suite on various topics, a lot of M&A activity in the RIA space.
Yeah, absolutely.
Lately. And you're starting to see a lot of private equity come into RIAs, and they need to really think about what is their brand, what's their messaging, how do you differentiate yourself, how do you integrate your tech stack, what do you do on the marketing side? And so kind of split time between, Juno Beach, Florida, we're in Lauderdale here, and Breckenridge.
Right. That's great. So tell me more about the book. You said you wanted to accomplish kind of empowering the younger generation. What are the biggest things you're seeing that the younger generation is really struggling with in this industry? Obviously, training is a big issue. We're having, an economic issue from, lack of salaries, all these different things. What are the top 3 things that you think are keeping younger people from being successful long-term in this career? Because there's a lot of people with some short-term success.
Yeah, I think it's a really good question. The book is kind of formatted in kind of 3 big chunks. One is for the people that are working that are 5 to 10 years in, trying to figure it out. What I've seen is that there's a desperate need for external coaching, where you have someone that can help to guide but not tell.
Right.
And that's an investment that a lot of people don't do. I was fortunate enough to be labeled a high potential at Merrill and had a coach, and she's still my coach, still my friend after 30 years. Every time I go to Philly, I get to see Fran. And I think it's important for people to seek external help
Yeah.
away from where you currently work.
Right.
You can avoid any conflicts of interest. And then I think it's also finding real good mentors.
Yeah.
Too often people will be a mentor for their own benefit. One of our dear friends, Phil Waxabaum, wrote a really compelling section on mentoring in the book about how he was helped as a mentor. And as you know, Phil's had some really big jobs, but then more how he's evolved into being a mentor. And so, too many of our younger generation don't want to get into financial services because it's hard.
It is.
I mean, it's a brutal industry. We were laughing about, me leading biz dev and recruiting, and the job's got a lifespan.
Yep.
3 or 4 years, and you expect to get shot in the head.
Yep.
And my kids are like, I would never go into your business. You keep getting fired.
Yeah.
I'm like, it's okay. It all works out.
You should see the package I got to leave.
Yeah. It's not fair to be told the guy you can't work for a year.
Yeah, exactly right.
But we really need to get the next gen in, and I'm glad to see a lot of firms are building up their TD capabilities, building up specialties where you're seeing a lot of these RIAs and super OSJs understand now they need to bring someone in to be the planner, bring in an insurance specialist, bring in an attorney, bring in a real estate agent. Build out a quasi family office. And then these are great places for young people to start and to be seated. And then that allows them to grow into being a financial professional.
Correct.
Because the reality is, you need to go through a couple cycles, and people don't get the joke. I mean, it's been great last 10 years in the equity markets, but it's all a cycle, and we're gonna go to that trial, and you have to survive a couple of those trials to become really valuable to your clients.
100%. I think it's one of those, going back to the mentorship piece, it's interesting because my dad always said growing up, have as many mentors as you can, but be careful finding mentors, right? Because they tend to be, and you see this a lot in our space specifically, right? Being mentors for their own benefit, being mentors in ways that almost put them in a position to manipulate people, the younger mentee. And so it's been interesting. I've had some really, really good ones, and I've had some really, really bad ones. And I would say the 2 or 3 that I still have, are super valuable to me. I was on the phone with one of them yesterday. We were talking about Jim Stearns, and it was like, hey, I was going through it, and he's like, you want me to be a coach or a friend? And I was like, that's the kind of mentor you need. He's like, hey, you want me to tell you the truth right now? Cause I know you're dealing with it. Or do you want me to be like, man, the truth's going to hurt a little bit. Are you ready? He always says, is this coach time, or do you want me to take the whistle off? Right. And so that's super valuable. Some of those conversations where it was just like, man, I was getting my head beat in yesterday, and it was valuable to have that conversation. We have some of those conversations. I have a lot of other guys, as well. But I think that's something that in this industry, there's sharks.
Yeah.
And it's like, hey man, just be careful. And I think all of us, our group of, our community is a really good community. The one that kind of surrounds you, surrounds me, surrounds some others. Because we've been careful to kind of curate that relationship. And I think I take it really personally to make sure that we are doing our best to give back and mentor other people, because if we're not going to do it, who knows where they're going to end up with, or who they'll end up with as mentors.
Yeah. Jim's a great example of a mentor. We hired him from Mass. He built out an amazing organization and continues to grow it. And he's always been very people focused, and the best mentors are the ones that actually have a heart. And they get beat up a lot. I've had the people like Jim who are doing all the right things, but it's not happening fast enough.
Right.
And so the company will be like, this isn't happening fast enough. And I'm like, that's not how it works. I mean, it's like private equity, right? I mean, private equity, it's a big sandbox of scorpions. And as one former CEO told me, we've got the nicest scorpion in the sandbox, but it's still a scorpion.
Yep.
Right. And so you have to make sure that your mentor is someone who is doing it to help you.
Yep.
And not help themselves.
Correct.
And Jimmy's a good example of that. And there's plenty of people out there. The other thing about mentors is when you find out they're doing it for their own self-good, cut them quick.
Cut them quick. Yeah, 100%. I mean, Jim gave me the opportunity to move from like the insurance space to the wealth management space. And like, I thought I knew how to recruit, right? I recruited a lot of $500,000, $1 million producers in the insurance space to Mass Mutual. Great. It was a great career. It was a great time. Had a blast doing it. And then I left and went to the wealth management space with Jim. And man, that was a whole new world, right? It's a whole new group of people, a whole different personality type, a whole different, you're moving multi-million-dollar businesses. You're not moving people who produced $1 million. And that's like a huge distinction, right? On the insurance side, that guy maybe did $750,000 of transactional business, but he's only really moving a $250,000 practice. You move on the wealth management side, you're moving $1, $2, $24, $25 million businesses. These people have, these are real legacies at stake, right? And you really have to handle that with, not that I didn't handle it with care, but you really learn to handle it with a whole lot more care and professionalism and the ability to maybe help a business owner solve a problem versus just getting them a check. They don't really care about, I'm not going to say they don't care about a check. That might be the biggest lie I'll say all day. But a guy who's making $10, $15 million a year isn't worried about a $10 million, $15 million signing bonus. Yeah. Transition assistance.
It is interesting. There's not many people that have transitioned to wealth management as well as you have. Mm-hmm. I always loved hiring insurance professionals, not because they had a big book of business, but they have the ability to talk to people and to sell and to drop tickets.
100%.
And so when I was at Ameriprise, we realized that the insurance professionals that we brought on were the ones that were the most profitable the earliest.
Correct.
And you just had to teach them how to gather assets.
Correct.
Right. And so I'm a big fan of with a lot of my consulting clients to get them over the hump of, no, it's okay that this insurance professional doesn't have a big book. Mm-hmm. She knows how to sell. Right. She knows how to drop tickets. Right. You can teach her the rest of the stuff. And you're right. What a lot of times the data analytics people, the CFOs, they don't realize that when you place a $20 million team, and I want to hear about this big team you placed last year, but when you place a $20 million team, when they resigned, they're out of business. Mm-hmm. They have an asset that's worth $100 million, $150 million, and overnight it's worth zero until they make that transition. And I think too often people don't have enough empathy for what it takes to pull the trigger. Mm-hmm. And the other thing that the same kind of set, the data analytics people, the CFOs, the finance geeks, that they don't realize that the biggest asset this person has is their business, right? And making that move is dangerous and scary, and they need people like you to coach them. Yeah, they're external to make those kind of right decisions. And so I think that we think about the segment of 3 segments of people. We need to get more younger people in, and then we got to help the people that are bouncing against the C-suite. How do we help them to get to the next rung?
Right.
And there's not enough time or attention paid, because what happens is, you get in your 40s, you're in your high earning years, you're having kids, you're growing a family, and all of a sudden you're just on a treadmill. Mm-hmm. Like, is this it?
Yep.
Right?
Yeah.
But then, you've got more money than anyone else in your family, any of your friends, and they're all like, oh, you're fat, dumb, and happy. But it's like, what's next? Right? And so there's a segment there. And then the third segment is just the people who are like, you're done. You're like, wait a minute, I've been working 30 years. I've been grinding hard and I'm done.
Yeah.
There's no book on becoming a new parent, and there's no book about the reality of when you're done. Like, I'm pleased I'm not working for a large company anymore. Mm-hmm. Super happy. Loved Merrill Lynch when it was Mother Merrill. I mean, I have the dearest friends and the fondest memories. Ameriprise was an incredible experience, allowing me to have the ability to understand the W-2 segment and take 110 managers and help them to learn how to talk to people.
Yeah.
Because right, what we're recruiting is pretty simple, right?
Yeah.
It's math and it's science and it's art, and it's just having the ability to talk to people and do what most people can't do, which is learn how to listen.
I would say it's like that's the key, right? Is listening and learning how to explain the same thing 3 ways. Like that's a huge one. I'll say something and I'll be like, how have you not heard me yet? How have you not heard me yet? How have you not heard me yet? And then you just change the way you're portraying it. Some people hear it in stories. Some people hear it in, you just have to give them the bullet points direct. Sometimes you have to give them like, talk about more of like an emotional state and how it like is going to connect. People interpret or internalize things differently. And I think that's a huge thing, is learning how to hear them and listen to how they speak to you to understand how to speak back to them. Right. If they speak to you in story, you need to give them a story back to explain where you're coming from and how they move on. Right. So I think that's a big piece, listening, not just to the sake of listening what they want, but listening to understand how do we best like communicate back to them.
Well, and it goes back to, and again, I don't want to keep bashing on finance people, but recruiting is typically a 6-month to 3-year process.
Yeah,
right?
At least 6 months.
Yeah. Right. And recruits move on their own timeline. They don't care about anything else. Mm-hmm. Right. And so you're better off learning how to listen to them and instead of preparing your answer as they're speaking.
That's huge.
Just turn it off. Right. And learn about their family. Mm-hmm. Learn about, their how'd you get in the business? What do you do for fun? Yeah. I saw your office down there and you've got an entire gym laid out. And then longer term, what's the big picture? What are the dreams? Right. And then eventually one of those 4 segments is the hot button for that, mm-hmm. That person. And then our job is to help solve it for them.
It's no different than working with a client, right? Clients move on at their pace, on their terms. I mean, and I think that's like a big thing, right? Like ending up in recruiting, I got conned out of being a financial advisor. I still think I'm like, man, I should have stayed an FA. I would have been at a $4 or $5 million book by now. It's like the best salespeople are the people who are the managers who convince good FAs to get into management.
Yeah. Look, I'd be in Cincinnati doing $15 million.
Easy.
Right. And I think about that all the time. But you know what? We all make our choices. It all ends up working.
Yeah.
And again, we can help so many people at scale in the world that we live in, And so you went from insurance. You were with Jim mm-hmm. At TOTUS, who's doing an amazing job. What was your big ahas when you got into kind of the space that I'm in? Because I'm just learning the insurance space now. But what were the big wow?
I think for me, I spent, my background, I played professional golf for a while, and then I moved into kind of like redneck insurance, as I call it. I was in the IMO brokerage space. I left and joined MassMutual and had a good run as an advisor, and then a manager, and kind of was a number 2 over there. And really, my old boss there, who is a shark and a scorpion, but he knew how to recruit. He was a great recruiter. So I learned a lot of valuable lessons. He left and went back to New York, like all good scorpions. And I decided I wasn't going to follow. And I looked at a few other options at MassMutual. They tried to kind of keep me in-house. And I said, you know what, I'm going to go join Jim. Me and Jim had talked for a while. I joined Jim, and man, did I learn how to recruit. He's great on the psychology side. He's great on the communication side. He's great on the story side. And people just love him and trust him. I think the big things that, I was also growing as a person still at this time. I'm 28 years old, right? 27, 28, trying to figure out. A lot of that is hey, who am I as a person? And the way people talked about Jim were hey, he's a good dude. He's been around the industry. He had reverence. He had respect. He really did care about making sure that we lived up to what we said we were going to do on the recruiting side. You see a lot of the wealth management recruiting, there's always jokes, pick a guy to Wirehouse who's that guy's a great recruiter, but he promises things that we can't do. And then hands it to somebody else and it's their problem, right? That's kind of an epidemic also. But I'd say solving problems in people's business was the number one thing we had to do. If we don't solve a problem for them, why move? Because it's not for a check. 2, these guys have businesses that are worth 5 to 7x on a multiple, like treat it with care. This is their family's legacy. And 3, I think the big thing was, man, what the fuck is a platform? What's an SMA? What's a UMA? Like, I had to kind of figure it all out. What's a spread option? And so I kind of I sat there and knew how to talk to people, knew how to get them to do the business development piece, knew how to get them to Jim. That was like how I kind of started. And then Jim was like, hey, do this meeting, then do this meeting, right? So he really trained me up on the space. I spent a lot of time self-studying. I think that's an epidemic among young advisors and just young people in the general. They think that if they just sit around long enough and watch somebody do it, they're going to be successful. Like, no, you have to go. I mean, I still read Advisor Hub, Citywire, or whatever it is for a couple hours every day, making sure I know what's going on in the industry. You can't just expect to get everything through osmosis from 9 a.m. to 5 p.m. That's just insane.
Yeah. Well, that's why I do a lot of consulting calls, because you get a sense of what's happening in the industry. And I want to pivot back to something he said, because eventually you get, so you just gave an amazing story about having a mentor who was looking out for you, right? And I think that is something that everyone should really think about if you don't have a mentor. But something else that you said, not directly, is that the older you get, you only want to really work with nice people.
Yeah.
And good people.
Yeah.
Right? Because life's so short, and it's you don't need to work with the guy that is going to move every 7 years or 9 years for a check. Or, as we talked about earlier, I don't understand why these little $100,000 producers think they're so important.
Oh boy, let me tell you. Yeah.
Yeah. It's like at Merrill, I decided I would never work with engineers or doctors.
Yes.
Because I can't be that detail oriented for the engineer.
Correct.
And it drove me insane to see how doctors think, well, I can transfer my medical skills to the finance side, and they just waste so much money and make so many poor decisions. So I think it's important, that you really work with good people. And as trite as it may seem, people that have got good hearts and integrity, because the ones that don't, I mean, I've hired hundreds of people. I had to fire a lot of people. And when you have to terminate someone, you want to do it with empathy and care. But the response you get is one, which is, are you out of your mind? I'm the best ever.
Yeah.
I got the most activity in sales.
The people who you fire are the people that think who are doing the worst are the guys who in their mind are the best.
Yeah.
Every time.
Yeah.
Every single time.
And then you got the other side where they exit with grace and care and calm. And then you want to help them get the next job, right? The ones that you have to get rid of, who end up being super aggravated and angry about it. It's pretty simple. It's look, dude, you're last on the stack rank. We have a stack rank for a reason. It's not about your activity. It's how much do you close?
Right.
Right. And so I think that it's important to work with just good people.
Yeah, no, 100%. And going back to Jim, when I left in January of 24, I was like, hey man, this is what I think I want to stick around. He's like, dude, you need your own thing. You keep telling me you want your own thing. You need to go do your own thing. You need to be the guy. You want to be the guy. I know you want to be the guy. Go be the guy and tell me, and then come back and tell me how it was. So I left in 24 and started with some smaller producers, found and then.
Well, it's probably careful what you ask for.
Yeah, right. 100%. I'll get to that story here shortly. Right. But I left and it started with the true just third party recruiting firm, Revolt. Wasn't named that at the time, but you kind of was just masquerading, doing my own thing. It was just me. I just left TOTUS and I did, I think $85 million of GDC moved in 24 and had a really fun time doing it because it was just me. I ended up, a guy joined me named Alan, who's he's my moral compass. Love this dude. Just took a job at LPL. He's killing it, by the way. Not on the recruiting side, just to be clear. He didn't leave me for a recruiting job. He left me for a big time executive position. So go fuck yourself.
No, look, I'm a big fan of Rich. I was very happy when Rich got the CEO role at LPL. I had actually, I was looking LPL before I started at Cetera. I had a conversation with Rich about their W-2 initiative.
Yeah.
Right.
Killing it.
And I always thought that, and I after I left Cetera, I'm like, dude, I kind of feel like you're always trying to get me fired. Because they're relentless.
100%.
They're relentless, and in a good way, right? But they're also, unlike a lot of these firms that are private equity backed, that are decision by committee, they could turn that ship quick because they're modeled, more modularly, and I was always impressed with how quick they could turn a deal around, how quick they would lower the gaff, how quick they would meet the issue grid.
Yep.
And so I was super happy with when Rich got the job, and
they've been a good partner for us.
Yeah,
they've been a really good partner for us. So that's when the Alan left. I was like, yeah, man, like go do it. But yeah, like, I mean, I mentioned Alan because he came on and I was like, Alan, I don't want to scale this thing at all. It's just, I'm killing it by myself. Like, I don't want to do anything. And he's like, Eric, but what if we, so finally, like, slowly started scaling what is Revolt now. And, it's, to your point, like, this year, I was talking to a company yesterday. They're like, hey, how do we recruit more with you, Eric? We do a lot with your company. And I was like, hey, just so we're on the same page, I will only work 5 or 6 deals a year this year, and they'll all be 10 to 40 million. Like that's the only time I'm doing. Everything else will kind of go to my team and they'll work with you. And that doesn't mean $3 to $5 million deals aren't, you guys should be working with my team a lot. They're great. But like, I'm only going to come out for 10 to 45 is kind of 50. Like that's kind of like the numbers I want to deal with, where they're business owners, where we solve a problem. They're decisive. They make decisions. Small producers, indecisive. And guess what? That's why they're small producers. They don't make decisions. They sit in the analytics. They're probably a CFP, which stands for can't fucking produce. And they just sit there and they stare at it, and they'll be doing 300K now, and they're going to be doing 350 with market production in 10 years.
It's like when I knew, the attrition rate for new hires is quite high. And when I was running downtown Philly, when I would walk in, to a cube, because when I started, Scott Jones, I think he's at UBS now, we literally had a
bullpen.
We had a bullpen.
Yep.
We shared a Quotron.
Yep.
And it was literally a lazy Susan spinny thing. Like, hey, what's Intel at? But I learned a very valuable lesson from Dean Trindle, who I believe is at Morgan Stanley. Dean's probably doing freaking 30 million.
Yeah. Dean, call me.
I would be the first person in the office in downtown Cincinnati, and I'm in a cube, in a cubby, and he'd walk in with his straw hat, and I'd stand up like, "Good morning, Dean." The dude didn't talk to me for 2 years.
Yeah,
and one day he said, "Good morning, John." Mm-hmm. I'm like, Dean, what? Why you say hi to
him?
me?
Let me guess. He's every office has this guy. There's so much turnover. I don't learn anybody's name for 2 years. Every office has
boom.
Yeah,
that was it. He's like, you made it.
Yeah,
you made it. We made it. Like, all right, thanks, Steve. But I knew
usually the nicest guy too.
Oh, nice. Oh,
yeah,
absolutely.
Yeah, always. Every office has.
I get it. I'm the same way now. I'm like, you know what? Just survive a little bit, and then we'll talk. But the guys that would come in and read the Wall Street Journal in the morning instead of being on the phone, I'm like, you knew they weren't going to make it.
Yep.
100%. Or they're in a meeting and they're asking esoteric questions. I'm like, bro, just pick up the phone and talk to people.
Yeah, I was talking. I have a friend who's a good advisor. He's at an insurance BD, good guy, late 30s, does a couple $1 million, and he was asking me a question. I was like, the answer basically every time we have a conversation of how to scale, it's like, dude, you're thinking like a practitioner, not a business owner. Until you start thinking like a business owner, like there's no scaling, right?
Well,
we're this like
there's real risk though, right? Because we talked about this in the RIA space. I try to counsel people to not start their own RIA until at least 500 million in assets. What people don't understand is going from a W-2 environment to a 1099 or a hybrid and then to an RIA,
And then this model, you're talking about like standing up your own RIA. Yeah, like that's what the W-2 to straight to standing up your own RIA is the biggest con in America right now. Yeah. Tell me like your thoughts on that, because obviously I'm pretty strong.
Well, look, you talked about it being a practitioner versus being a business owner. And one of my biggest ahas with these large OSJs that I recruited, like, well, we're doing 20 million. And they got an EBITDA of $300,000.
Oh yeah.
Right?
Uh-huh.
And I'm like, wait a minute, how can you be doing 20 million and you got an EBITDA of 300,000? And so what happens is they overexpand.
Mm-hmm.
They don't anticipate what the real cost of running their shop is. And it's like, no, you talked about the multiple, and we swung and missed on a bunch of M&As at some of my prior firms because we weren't willing to pay the EBITDA multiple, right? And so everyone is like, if we could coach a large team, it's kind of doing what you did. You started your firm, you expanded, you contracted, and now you're at the right space, the right place. Too often, entities don't focus on EBITDA or EBOC, right? And the only way to really create transformational wealth is to focus on the EBITDA and EBOC.
Yep.
And that means making hard decisions.
100%. I was literally talking about this with a buddy yesterday. Like, I built Revolt initially as an exit play, which means cash flow isn't super important. Now I've decided that there is more of a balance that needed to be had for us. But like, I think you do have to either build with one in mind. You're either like, I'm going to gather all the assets if you're an OSJ. I'm going to gather every asset. I'm going to do it at the slimmest margin, and I'm going to sell this thing in 3 to 5.
Yeah.
Or you build a cash flow play for the multiple. Like, it's one of the two.
Yeah. I mean, look, if you're in a W-2 environment, you need to go independent before you retire.
100%.
Because all of the retirement plans at the wires are ordinary income, the short term. They don't value what you build. You go independent, you own your business, and then you can get a fair exit multiple. In the RIA space, everyone's going RIA thinking,
no compliance. That's my favorite line.
Yeah. I got to give up my FINRA licenses, and I get everybody off my back, and I'm going to sell it at a 15 multiple. And you're like, first of all, you have to have EBITDA.
Yeah, right.
And every deal is based on EBITDA, not gross.
Correct.
Right. Secondly, you need to understand, your expense structure and what you actually need to stand up a business. Like I'm super impressed with Dynasty and what Sheryl's done and how they approach that business, because I think it's training wheels for people that
100%
want to get in the
you got space. Dynasty, you got New Edge. They're all kind of like that, similar. Like, hey, like you don't have to go do your own thing, but you can do your own thing with us.
Yeah,
right.
You bring up New Edge. I love New Edge because it's legit. It's real. The equity's real.
Yep. Bob McCann's there.
They have done a phenomenal job with a lot of clients that I've coached, and what people have to worry about, or they should worry about, is there's so much private equity money flowing into the RIA space, because they're seeing, that right now you can get, partial, call it 19, 20% permanent equity from several firms at a 8.5, 9 EBITDA or EBOC multiple. And the whole intent is to go public or exit at a 13 to 15, right? And so you've got these recruiters who will probably end up in jail quoting exit multiples.
25x today.
Yeah. It's like you're out of your mind. Yeah. It's like, first of all, if you know something is inside information, you're going to jail. What? And then when someone exits at a 10, not an 18, you're going to get sued.
100%.
Right? And so what I coach people that want to go RIA is you got to go with like a New Edge where it's legit, because there's so much money pouring in, and this phantom equity is just that. It's phantom. And you don't have founder's equity.
Yep.
And you are not going to get that exit, because today there's not a public appetite for a low margin 1099 business.
No, I think New Edge will go IPO. I think they'll do it that way. I think that's my gut. I don't know. This is not insider trading. I don't know that for a fact, but that's my gut just based on like what I see. And I think it's a great play. I think the stock's trading well.
They've grown the right way, and I think that
they've self-funded a lot of it.
They have, and they focus on what we talked about earlier, which is they only want to work with good people.
That is huge. They will say no to people.
Right.
Which I like. I love a firm that says no to them. Rockefeller does the same thing. They'll say no to people. Obviously, congratulations to Mr. Outlaw on his new gig. Congrats.
Yeah. I'm a big fan of, as a matter of fact, Jeff Harvey, one of my reps at Merrill at the time. Actually, he was my financial consultant at the time. He went to Rockefeller years ago. And I mean, I love Dupuis. I love what they're doing.
Happy retirement to Mr. Dupuis.
Yeah. Yep. And I mean, what a great career.
Yep.
I don't think we ever really retire. You kind of.
It's the scariest thing for every.
Well, it's like I spent a year on this book, right? And I finally got my last equity, and I'm like, all right, I can only work out once a day.
Yeah.
Right.
You can only ski so many times.
Right.
You can only play golf so many times. Yeah, 100%.
So I'm a big fan of what they're doing at Rockefeller. And matter of fact, I was working with an Ameriprise rep that just left and went there and joined a team. I think what people have to realize is that when you got like 10 years left in your career and you're in the W-2 channel, it's time for you to go independent. Mm-hmm. It's time for you to hook up with a good firm like a New Edge, or have the ability,
call a recruiter.
Yeah.
Call a third-party recruiter, Revolt Financial.
Yeah. Call Eric. But you placed a monster team at New Edge, right?
Working on one, right?
You placed a huge team. So tell me about that one, because that's like, I mean, look, your business is ideal in the sense that it's kind of nice to only do, 2 or 3 trades a quarter, right?
Yeah, if it's that many. Sheesh. Well, let me tell you, my mom always asks me this. This is my favorite one. My mom goes, "How do you make so much money recruiting? What are you doing? Is it illegal?" Right? And my answer is this, and this is kind of a cocky answer, so take this with a grain of salt. But I mean the sentiment in some ways. If you're one of the top at what you're doing in the world, you're gonna, no matter what it is, it could be underwater basket weaving, it could be recruiting, it could be sewing pajamas for pigs. You're gonna make a lot of money.
Yeah.
That's just the way it works, right? So I probably do 2 trades a quarter that are big, and I obviously help my team with the rest of them. But yeah, this one was a unique one. It was a Wirehouse bank regional that had just was changing clearing firms, forcing their team to go. All their advisors who had been there which were big advisors, about 50 of them at the time. There's now less than 25 because half of them left. But sorry. They changed clearing firms, and they were forcing a repaper and doing the executive shuffle at the same time. And these guys had been there for 20 years, and they're like, "We're good. Yeah, we're good on this."
So your repaper, why stay?
Yeah, repaper for free, no retention checks too. You're just like, and I guarantee there was money coming from this clearing firm to the bank, and I guarantee the executives gobbled it all up. I mean, 100%, right? So I think these guys felt betrayed. They decided that it was time to move. We went through a lot of options. We looked at standing up in their own RIA. They were W-2. That wasn't an option they wanted to go to. Based on some of my counsel, based on stuff they had some friends do, that they just I don't want to hire a COO. I don't want to do payroll. I don't want to do all these things. And if I hire it out, my grid rate isn't 100 anymore. The 100% grid rate is the biggest lie in America. And so we looked at some options, and what they wanted was the ability to kind of offload some of their work to and play more golf. So the place we took them had an internal TAMP with incredible pricing. And a TAMP that aligned with their investment philosophy. They also had this unique twist where they were doing level 3s. And so finding somewhere that was independent, that would allow spreads, was slim pickings. A lot of wirehouses will allow it because it's W-2, they're in branch, they'll oversee it. when you start getting into the independent world, the riskier options are lesser allowed because of the supervision needed or required to administrate those trades. So for them, they didn't have a whole lot of options. It took some like kind of prying, quirking. That's where like the relationships with a third-party recruiter and like my relationships with executives at company is huge, because you're going to have to get something custom. You're going to have to tweak it. You're going to have to do these things. I was just talking to you today about this huge team we're working on with New Edge, and it's a $43 million team we're looking at moving. And the big thing with them was they're coming from, listen, I'm not going to say, but they're coming from more of a captive environment. And the first negotiation is getting evaluated by the company to make sure that the transition checks properly. Like there's so many levels of negotiations and different things you're fighting. You're like, the first battle's this, then the second battle's this, the third battle's this. And you're working with these internal recruiters and the executive teams on things that an advisor has no idea about, right? I'm like battling 10 times and they're like, where are you?
Yeah. And you're what people don't realize is that one of your roles is let's identify what's not portable, right? And then we have to either get it portable, which again is executive conversations, onboarding conversations, CFO conversations. But I want to pivot back to something you said earlier, the 100%. This podcast is intended to be educational, to help, right? And so let's just put a stake in the 100%. There isn't a 100%, right? There isn't 100%, because you and I want everyone that is watching this to really, if you're running a large entity, you need to refocus to EBITDA.
Yeah.
That's the future, right? And we talk about succession. I think it's going to be reasonable for you to, get a 10 to a 12 on the EBITDA, or if you're not being a pig on comp, EBOC, right? In the future. And that is going to be your last check for your family, because you're going to have enough money on your own. You're not going to need it, but that's going to be your legacy.
Yep.
And so a lot of times when you think about 100%, you're forgetting about, okay, who's going to bring the water?
Yeah.
I got the electric bill. I got to hire a CFO.
I mean, let's just start off at
the
beginning. Let's just start like, okay, you're 100%. Okay. That's custodianless. 100%. Okay. You got to go hire you got to go get a custodian. We haven't, like, 100% is a ADV in the air kind of.
Yeah.
Like that's all it is. Like then what?
Well, the other thing that is important, as if we really focus on EBITDA, is your GAF.
100%.
And so I literally, one of my former employers printed what could be a 500% deal, because their GAF is so out of control that they recognize they're being sold against.
Yep.
Right. And again, that's why I thought Rich was always trying to put me out of business, because I would come in, fully wrapped at 10 basis points, and LPL would undercut me to 7. And I'm like, dude, come on, man.
Yeah.
Let's play fair.
The thing with the gaffs is, like, that's where, like, they go into, like, let's use FINRA as an example. Like 90 is not 90 there, and 90 at LPL, 90 at Cetera. They're like not even comparable.
No,
none of them are, and they're all not comparable for different reasons.
Yeah.
Cetera, you got your big, and that's like throw a dart to Cetera. You guys have the platform fees are just ridiculous, and then you get onto LPL and you got GAF fees that are ridiculous. And on FINRA, you kind of got both that are ridiculous, which is kind of an issue. But
and again, I think your job to helping large teams is to, let's not, the upfront money, whatever it is. Let's just put that on the side. Let's really think about, you're entering a 9 to 11 year deal, probably.
Cash flow is going to outperform your transition every day of the week.
And so I had at Cetera, I had a $7 million team that wanted to leave. Their GAF was costing them about $760,000 more at their current firm, but they wouldn't pull the trigger because they had done practice acquisition, and they were afraid of attrition. And so I think one of the key roles you play is, let's cash flow this out, right? And if you, I mean, look, at LPL, if you're over 500 million, there's no gaff, right? And Finet does a wonderful job of reducing the gaff in terms of platform fees. I mean, look, the independent firms that are created by smashing acquisitions together, they make 80% of their money on attachment revenue.
Correct.
Right? So ticket charges, they can't afford to lower the gap.
Correct.
They affiliation fees, some of these affiliation fees annually
15, 20 grand.
Right.
You're like, oh.
Right. You're like, wait a minute. Okay, so I'm here for 10 years and I'm spending 150 grand on affiliate.
And I got by the way, I got an assistant. They're going to charge me $3,000 to have an assistant a year. You're like, what?
Right. Right. Or if you want to hold away, they want to charge 2 points for supervision or 5 points for supervision. So I think it's really important that big teams move away from, the $20-30 million check up front and really cash flow it out, number one. And then number two, don't overexpand, right? Grow intelligently. I did some consulting work for Janney when they were with Penn Mutual with Jerry Lombard. I loved the guy. He was retired. But they had this philosophy at the time where they wouldn't hire until it was about to break. And for a while, you're kind of like, why wouldn't you invest ahead of time? It was actually a really good lesson for me to learn because I've seen too many of these large OSJs hire. And then the cash flow takes longer to catch up. And all of a sudden, their 93% payout is less than the Wirehouse.
Gotta stay small long enough, you'll be big soon enough, right? Like that's the thing that Jim used to scream that at me from the frickin'. I was like, can we get some more staff? Like, we just seem to be like really behind. He's like, stay small long enough to be big soon enough. And I think I like, tried to fight that one a little bit, but I think it's long term the best advice you'll ever get. Tell me a little bit about, I know you've been talking to me, screaming at me, and I may be the old man in this group. I own no crypto. I'm a skeptic still on the whole crypto thing.
Yeah.
So tell me a little bit about, like, you just did your FINRA CEs. Tell me a little bit about how crypto came into that, because you're trying to preach to me over there on the couch earlier.
Yeah. So look, I have all my licenses, including the supervisory licenses, and I was very happy that FinPro is allowing us to have our licenses not be eliminated for up to 5 years. Mm-hmm. And so I paid the $135 for my CE for this year. And I was really impressed with the FINRA CE crypto kind of knowledge base. Typically FINRA is years behind.
Correct.
Years behind.
Yep.
And crypto and scams kind of go hand in hand.
Yeah.
And so I would just tell everybody that we all have to do our CE for this year, jump to the crypto section because it's a really good primer on, I've always been a big fan of distributed ledger technology, reducing friction, cutting out the middleman. And distributed ledger technology is kind of the backbone of crypto. But the FINRA CE stuff really helped to educate me. And I would encourage everyone, and again, FINRA is not a client. I'm not being paid to say this. But
paid spokesperson.
They did a really good module, and it ties back to scams.
Yep.
Because for whatever reason, my cell phone's out. My cell phone's out there. My website has my cell phone. My johnpierceauthor.com has my cell phone. So my cell phone's out there, and I keep getting probably twice a week a text. Hey, do you want to play golf on Saturday? And I'm like, who's this? And it's always a
good-looking
Russian person who's like, hey, can we take this chat to WhatsApp? And I'm like, no.
My favorite, I got one yesterday. It was like, hey, random number. It was like, hey, do you want to still go to that concert tonight? And I was like, who is this?
Right.
And then it was like, so sorry, wrong number. But hey, I'm such a silly girl. I'm like, what are you talking about? Yeah, I thought about you immediately.
Yeah. Or you get the, hey, well, I tell you what, next time you're in LA, because they're always LA or New York.
Or Miami. I guess some in Miami.
Maybe I'm not on that list yet, thankfully. But LA or New York, and they're like, hey, next time you're in LA, I'll buy a round of golf for you. But anyway, I played the string out because I just want to see where it goes, and it always is crypto. Like right there, I had this one girl send me a screenshot. She made $9,000. And I'm like, that's nice. No interest. It was the day the market was up, and I'm like, I'm up like $320,000, but it's like, just open up an account with me. Let's have a joint account. So I just, I would encourage everyone that the reason the FINRA, is so focused on SMARSH and on cell phone retention is there's so many scams out there. And I would just tell everybody, be super careful.
Yep.
I own IBIT, right? So I don't own pure crypto, but I do own IBIT because it's an alt, just like gold. But I would not buy these meme coins. Distributed ledger technology is real. It's never going away, and it does reduce friction in the middle person, right? That's all good. What's bad is the pump and dump schemes. I mean, so much that goes on with crypto is the same stuff that was happening in
this is boiler rooms in the 80s,
right?
This is exactly what it is.
Exactly right.
Exactly what it is.
I tell anybody, if you're buying a stock that's under $5, expect it to go to zero.
Yep.
And in 95% of the time, that's what happens. And so, I would just encourage everyone to not push off the FINRA crypto training, because it's the first training that I've taken in 30 years that I was like, wow, I actually enjoyed this. Like I learned something from it. And then they've also identified in some of their top priorities the texting scam. And so I would just tell financial professionals that get upset about their compliance or legal departments in their cell phones. It's like, you know what? They're just trying to protect you. It's like they're just trying to protect you. So anyway, that was a diversion. I think, from my perspective, if you're a big team, focus on EBITDA and EBOC. You need to work with a person like Eric who has actually closed big trades. You have an obligation, if you've been in this business for 20 years, to help others. We are all incredibly wealthy because someone helped us.
Yep.
Good mentors, good coaches. We had people that did stuff for us that when we look back now, we're like, we need to repay that.
Yep.
And again, that was the whole reason I took a year to write the book. I'm not a very reflective person.
Me either.
But sitting on the hill with the water coming down and the snow melt, and you're just sitting there thinking about stuff, that's the why. And so I appreciate, this is, I can't wait for the guests we're going to have.
Yeah, it's going to be really cool.
And from me, what I take from, this hour, and I hope everyone takes it, is be a better business person. Run a real business. Focus on the EBITDA. Forget about the top line, because the EBITDA and EBOC are going to be how you're going to get the 10 to 12x. That is not going to really be that meaningful to you, but is going to take care of your grandchildren and your great-grandchildren.
100%. I think I love both those takeaways. Be a better business person, just be a better person, right? Like all of us can take the time to spend 20 minutes with a junior advisor or a new advisor or somebody new in the industry or somebody who thinks they want to get in this industry, right? I think it's our obligation to just make sure we do it the right way and help these people. And yeah, really excited to do this podcast. I think there'll be one every 2 weeks coming out. So we're really excited. We're going to have some great guests. We're going to have some real stories, real talk. And we're going to tell you how it is. I think that's the cool thing. John Pierce is obviously known for saying what's in his mind, and I'm not much different. So I think this will be a pretty candid podcast with some real hard-hitting stuff, and really excited to spend more time with you guys every couple weeks and go from there. And JP, it's always a pleasure, bud. Thank you so much.
Appreciate it.